Yes, no one is saying that. I mean, very few in the mainstream media are linking these views. In many countries, on many continents, there is a quiet, coordinated plan underway that is, frankly, bigger than most people realize. Central banks are buying gold at record prices, US. States are actually making gold legal tender, and overseas BRICS countries have just started a gold-based digital currency system. But what most financial commentators fail to notice is that this is not a conspiracy theory circulating on the internet. That is the real policy. It is real money. It has a real impact on your wealth. The question is not whether we are returning to gold. The question is when, and more important, are you ready? Stay, because I will analyze in detail what happened, why it mattered, and what it means for your portfolio. To understand why the world is secretly returning to gold, you need to understand why people are aware of a very disturbing reality about the dollar itself. Treasury bonds are now $39 trillion, and I want you to think about it first because it is not a typo. That is equivalent to $39 trillion. Now things are getting worse. In 2026 alone, interest payments on debt exceeded $1 trillion a year. That is more than we spend on defense and more than we spend on education, which is actually the fastest growing program in the federal budget. What most people don't understand is that there is no realistic math to get us out of trouble. Those numbers don't work. You need a big tax cut or a big tax increase, neither of which is politically feasible, which means the printing press is still running. From 2020 to 2022, the Federal Reserve expanded the money supply by about 40%. Consider that 40% of these new currencies chase the same goods in the economy, which leads to inflation, not the kind that theoretically appears on your grocery bill. It is no coincidence that your purchasing power has dropped significantly. Your dollar is not as distant as it used to be. But what is really interesting is that people who understand how money actually works, central bankers, treasury officials, institutional money, can see it a mile away. So, what did they do? They started buying gold? Not at all. We are talking about the historical accumulation of gold. In 2023 alone, the central bank bought more than 1,000 tons of gold. I mean tons, not ounces. This broke the annual buying high of 37 years. Then in 2024, they continued to rise sharply, which you need to understand. The central bank does not speculate. They do not play the reserve game. So when the central bank buys gold, this is a signal, a vote of confidence. But specifically, this is not a vote of no confidence in the monetary system we are currently operating. Goldman Sachs raised its gold forecast for the end of 2026 to $5,400 an ounce from $4,300 an ounce 6 months ago. These are not gold bugs sitting online. They are major institutional participants, and the whole research department is processing these numbers. When they adjust their forecast this way, it means something has changed. 95% of the central banks surveyed said they expected to increase gold reserves in 2026, essentially a unanimous vote in the global monetary system. Let me give you a few concrete examples of what is happening. China has been quietly and steadily buying gold, with legal reserves of about 2,000 tons. But analysts believe the actual figure is much higher because they do not report everything at the same time, just to avoid market volatility. Despite sanctions and pressure from the real economy, Russia has been accumulating gold, the ultimate insurance policy in a world where the Western financial system could freeze your assets. As the current chair of the BRICS countries, India has been encouraging member states to hold more gold reserves. Then, just 2 months ago, in February 2026, Poland bought 20 tons of gold, this time sending a signal because Poland has traditionally been consistent with the Western monetary structure. But here they are, diversifying from pure dollar holdings. The World Gold Council predicts that central banks will buy about 850 tons of gold in 2026 alone, about $4.3 billion a year at current prices. Do you know what that tells me? The richest and longest-running institutional smart currency is preparing for a world where fiat currencies carry less trust. It became very interesting because most people hadn't heard of it. At the end of 2025, BRICS countries such as Brazil, Russia, India, China, and South Africa launched a product called UNIT. By the way, the mainstream media kind of hid the story, but the impact was absolutely huge. The stock is a gold-backed digital settlement currency, which means something will happen. 40% of its value comes from physical gold stored and audited in vaults, and another 60% comes from BRICS reserve currencies. This is based on blockchain technology and is designed to be fast and efficient without the need for Western financial infrastructure, such as SWIFT, to process transactions. Now think about who we're talking about here. Brazil is a major commodity producer, and despite sanctions, Russia remains an energy superpower. India, with 1.4 billion people, is the world's fastest growing major economy. China remains the world's manufacturing center, and South Africa controls the production of major precious metals. Together, these countries account for about 30% of global GDP, control vast natural resources, and have a population of about 4 billion, and have just created an alternative payment system that explicitly reduces demand for dollars. In January 2026, it was reported that BRICS countries used more than $1.17 trillion in non-US dollar currencies in bilateral trade. That is to say, $1.17 trillion completely bypassed the US dollar system. The department aims to make future jobs easier and more efficient. The bottom line, this is not some fringe cryptocurrency project inspired by online communities. It is backed by sovereign states. It is backed by central banks. It is backed by gold. The BRICS, which control about 50% of the world's gold supply, do own the gold that will support the system for decades to come. Will each country switch to the unit immediately? Not for a year or two. But what we are seeing is the beginning of a multipolar monetary system in which the dollar has lost its monopoly in a world of multiple currencies and multiple settlement systems, and it undoubtedly believes it has been holding on for so long. Gold is the ultimate neutral asset that every central bank wants and every investor should touch. When most people learned this, they were shocked by one thing. You don't need the federal government to make gold fiat money. States can make their own. Article 10 of the Constitution says that states can only make gold and silver fiat money to pay their debts, which legal experts explain means that states can actually make gold and silver fiat money. And that is what is happening now. Utah, the first modern state to do so in 2011, has a successful precious metals rainy day fund and plans to pay actual fees to state gold and silver suppliers in 2026. Florida just passed legislation this year to make gold and silver coins legal tender, which took effect on the 1st of July, 2026, and was signed by Governor Ron DeSantis, meaning that a state of 22 million people now says we accept your money as a means of payment. Will you pay your gas station bill in gold bars tomorrow? Probably not immediately. But the symbolism here is enormous because it shows that countries are losing faith in the dollar and looking for real alternatives. Imagine this conversation, where Georgia is legislating to allow residents to pay taxes in gold and silver and write checks to the state government in precious metals instead of paper money. Texas, Tennessee, Wyoming, Oklahoma, Arkansas, Louisiana, they're all moving in that exact direction. Interestingly, this is not a fringe movement of gold conspiracy theorists, mainstream politicians in important countries who chant that the dollar may be in trouble and that we need a backup plan. More and more people are using gold-backed debit cards and digital tokens, which represent physical gold stored in secure vaults. So when you buy gold, you get a digital token that can be used to buy or trade without touching paper money. Is this a full return to the gold standard tomorrow? No, taxes and major payments will remain in dollars for the foreseeable future, but what we see is piecemeal returns, gradually shifting to precious metals as a medium for value storage and exchange, which is happening, yes, and accelerating in 2026. Let's talk about what all this means for gold prices because gold hit a record high in 2026. We mean $5,000 or more an ounce, and then it pulled back like the market. This pullback made some people think the run was over, but the actual data showed that Central banks do not sell when prices are high, and they are still buying 27 tons of gold in February 2026 alone. Although gold trading is at these highs, which is important because this is not speculation but should be established by someone who knows better than anyone. The traditional relationship between gold and real interest rates actually broke down in 2025 and 2026. Because gold has historically performed worse at higher real interest rates because you can get better returns elsewhere. But what about 2025 and 2026? Gold rose, despite high interest rates. Why is this happening? Because central banks and really smart currencies recognize a fundamental problem. The dollar's purchasing power is falling at a rate no one wants to admit publicly. Goldman Sachs expects gold to reach $5,400 by the end of 2026, and some analysts believe it could rise sharply. The driving factors still exist: currency depreciation concerns, geopolitical instability, institutional buying pressure, and the whole trend of de-dollarization is playing out around the world. Now, I am not saying that gold will rise in a straight line. The market is not so simple. There will be volatility, there will be a correction, but the structural reasons for the current rise in gold prices may be stronger than in decades. If you are 35 to 60, you are thinking about retirement, you are worried that inflation will erode your savings, you want to know how to protect your accumulated wealth. What will all this leave you? Here are my thoughts. I won't tell you how to use your money, but I'll show you. A portfolio made entirely of stocks and bonds is exposed to currency risk, and if the dollar falls sharply and there is evidence that it will, even if you get a nominal return on your books, your purchasing power will be hit. Gold is not a panacea, but history has proved that gold is a value reserve under different monetary systems. And for a long time, when the currency depreciates, gold maintains its purchasing power. You don't need to go all out to buy gold, but making a meaningful allocation in your portfolio ensures the exact situation we've been discussing, which financial advisors have traditionally recommended between 5% and 10%. The shift to gold support and de-dollarization took place over the years, not overnight, which is actually good news for you because it gives you time to think, not panic. Physical gold storage security, gold mining stocks, gold ETFs, and even emerging gold support digital tokens. According to your comfort and investment maturity, there are many ways to obtain exposure. The point is to think about it now. And while you still have time and options before it becomes an obvious crisis that everyone sees at the same time, central banks are already positioning themselves, smart currencies are already flowing, and the country is changing laws, which means that the infrastructure of this transformation is right in front of us. That is what I think is happening, and that is where I'm trying to put it all together. We're not necessarily going to go back to the rigid gold standard as we did in the 1950s. And probably not. What we're really doing is acknowledging the basic fact that long-term deficits and unlimited fiat money will eventually lose the credibility of the world. The BRICS system, the gold movement at the national level, and the accumulation of central banks all point to a world where gold plays a more central role than in the past 50 years. In this case, the dollar has not disappeared, but it has lost its monopoly and unquestioned confidence in it. In a multipolar monetary system, there are many payment options and settlement mechanisms. Gold becomes the ultimate neutral asset, which is what every central bank wants and should be accessible to every investor. Ironically, sitting there denying that inflation is real, central bankers are building gold reserves as if preparing for the situation we describe, which does not confuse any of their followers. They are preparing for the coming world, and if you understand what they are doing, you have a chance to prepare. Thank you for reading this article, and if you find it valuable, you can consider subscribing because I do regular in-depth financial analysis and the topic will evolve significantly in the next few years. If you want to discuss whether gold is really a good investment, the comment must be yours, and I'm really interested in your idea. But what are the structural reasons? Gold is increasingly important in the global financial system. This is not a view. This is data. This is central bank behavior. This is the real policy that is happening before us. Stay informed and stand firm until the next time, and don't let the obvious surprise you.